Here's a unique image illustrating the concept of long-term investing through both a thrift savings plan, TSP, and a brokerage firm. Historical performance, TSP versus brokerage accounts, last 20 years. TSP historical performance. A G fund. The G fund has provided a consistent, low-risk return, averaging around 2 to 4% annually over the past 20 years. It's ideal for risk-averse investors, although returns have been lower compared to other funds. C fund, S&P 500. The C fund has averaged around 8 to 10% annually over the last 20 years. This fund's performance closely mirrors the S&P 500 index, experiencing significant growth, particularly from 2010 to 2020, though with volatility during market downturns. A S fund. The S fund has been more volatile but with higher returns. Over 20 years, it has averaged 9 to 11%, benefiting from strong performance in small and mid-cap stocks. An I fund. The I fund has been the most inconsistent, averaging around 5 to 7% due to fluctuating global markets and currency risks. Brokerage historical performance. Investing through a brokerage firm typically allows for more aggressive or customized portfolio strategies. Historical returns are highly variable depending on the investment vehicle. A S&P 500 benchmark for C fund. Over the past 20 years, the S&P 500 has provided an average return of approximately 9 to 10% per year, similar to the C fund in TSP. A global market indexes, MSCI World, etc. international stocks, similar to the I fund, have returned between 4 to 7% annually, affected by global economic instability, especially after the financial crisis in 2008 and the pandemic recovery. Technology stocks, Nasdaq 100 tech stocks have outperformed the broader market, with an average annual return of 15 to 20% since 2000, especially boosted by the rise of major companies like Apple, Microsoft, and Amazon. Individual stock performance. Depending on stock selection, brokerage account investors could have seen enormous growth, e.g., Apple has had a 20-year return exceeding 30% per year, but they also take on higher risk compared to diversified funds. Please stay tuned for the next video and thank you.